Alrighty. So today we're going to be talking, giving a quick overview of my two other favorite indicators, Vwap and RSI. And it's kind of the second set of indicators that are pretty important. These are just tools for your toolkit. They're not the end all be all, since I'm mostly a price action trader and found that that works best. But they're handy as a quick visual, and if used properly, you can churn some really good profits for learning from this. So be sure to pay attention. So Vwap, it's the most commonly used indicator by hedge funds for buying and selling intraday. And how you access the Vwap is you go to the studies set, and then you type in Vwap, VWAP, and then this should come up, add select, apply. And you can do this on Webull, link in the description. And basically what this is basically the Vwap, it stands for volume weighted average price. And what it does is it takes kind of like the mean of the price and takes the volume in account for that, and then gives you this nice little middle purple line. And what institutions and hedge funds use this for are for buying and selling intraday. And they buy when it hits Vwap, or they sell when it hits Vwap from the bottom side. So it's an intraday indicator, and basically it's trash on the daily time frame if you want to take a quick look at this. But yeah, see all that mess. So it's used for intraday stuff. So 1 minute, 5 minute, 15 minute. I wouldn't go past like the hourly using Vwap. But it's the average price combined with volume. The volume portion is the key part because the volume shows the strength of the price at that point in time. And so what the upper band represents is it's like standard deviations away from the mean. And remember, stocks like to revert back to the mean. And so when it hits the upper band, it's likely to revert back to the mean, especially if it's going to be like an inside day on the daily chart or not a range expansion day. So basically, the upper band is kind of meant as extended and likely revert back to the middle. And then when it hits the lower band, the yellow part, it's likely to revert back to the middle. And so basically, it's all nice and fine and dandy to use the upper and lower bands, but I actually like to remove them. And so to remove them, you go to the studies, go to the settings icon, you go to upper band, show plot, unclick that box, lower band, unclick that box, hit OK, hit apply. And you can save these settings, save set, you can name it, whatever. And so now we just have the middle part of the Vwap. So basically Vwap, how I kind of use it is above the Vwap, it's kind of bullish and considered an uptrend. And below the Vwap, it's considered bearish and in a downtrend. Vwap is resistance when come from beneath. Notice how Roku, once it hit Vwap, it sold off right here. So hit Vwap, rejected. It's called a Vwap rejection. And then if it comes from the top part, usually Vwap is support. So Vwap was support as of this point. And look, we broke below Vwap, and then Roku started a new downtrend. So it's kind of used to help get a quick visual of the trend. Above bullish, below bearish. And the reason I was talking about funds using this is that if a stock is trending on a day, whether it be higher or lower, if they can sell when it's far above Vwap, that's kind of how they get their bonuses, because Vwap is like the average price of that stock throughout the day. And if you're shorting a stock, if you can sell it at Vwap, you can get a bonus because it'll extend and push away from Vwap. So how I kind of use Vwap in my trading is, okay, before the trade, it's like, okay, are we above Vwap? Am I fighting the trend? So basically, I wouldn't take a long position, meaning I want it to go up, if we're below Vwap. I mean, if you can buy the lower band, maybe if you're a counter trend trader, but I'm slightly kind of what you would call a trend trader. That's kind of thrown out there a lot, but I buy when it makes sense and I sell when it makes sense. And so basically, am I fighting the trend or taking an entry at a potential inflection point? The potential inflection point is the middle Vwap, the purple line. So look, we had an inflection point right here. Roku had the chance to push up and it didn't push up and we fell. So that's basically the middle Vwap can be an inflection point. Sometimes I like to use Vwap as my stop loss if I don't have like a clear good area. Sometimes I'll be like, okay, if we're 5 minutes below Vwap, so go to the 5-minute chart. If we get like a 5-minute candle close below Vwap, then I'm going to be out. And right here, Roku closed 5 minutes below Vwap. I would be out of that trade if I had taken a buy point at Vwap or something like that. Maybe I took a high of the day break or pre-market break over it. So that's how you can get very quick, small stop outs. And so And what's also great for Vwap is SPY. SPY likes to hold trend above when it's above Vwap, and when it's below Vwap, it can be considered bearish. Look at SPY on Friday. All day, even through the morning, closed below Vwap first 5 minutes, sold off. Then we got above Vwap for a little bit, couldn't hold it, and then now we held Vwap for the rest of the day, and then it resumed an uptrend. So that's kind of the overview of the Vwap. Let me know if you have any questions. And then the other thing that I like to use is the RSI. So let's go back to Roku. And basically the RSI, let's clear this set. The RSI stands for Relative Strength Index. And how you get the RSI is you pull it up, you just type in RSI. And that should come up. There we go. RSI, add selected, apply. And so RSI is the Relative Strength Index. It's a momentum indicator. And basically what it's kind of showing you, it's this thingy down here. Let's kind of expand this up. And so above 70 is considered overbought. It'll give you like a little red signal. And below 30 is considered oversold. And it's kind of indicated by the blue. And what I used to do is I just used to be like, okay, just buy every time it's oversold, sell every time it's overbought. But that's a very rudimentary and novice way of thinking about the RSI. That's what the institutions want to get out of you as retail traders. Retail traders are liquidity for the big money. And so they want to trap you into thinking that oversold is the time to buy and overbought is the time to sell. Don't fall into the trap. I actually love it when I'm in a stock and the RSI just went to overbought. Let's show SPCE. I love when a stock starts getting overbought because that means it's supply and demand. The momentum has just become high. And if you think in terms of supply and demand, if it's overbought, which is a subjective term, there's demand and price is likely to continue, and vice versa. So basically, my actual favorite way of using the RSI, the Relative Strength Index, is actually called divergences. And divergences basically mean something has changed in the RSI that we haven't seen yet on the price of the stock. And so how we use that is we use it to find a trend reversal. So an example of this would be on SPCE on Friday. When the stock was making higher highs, look, it's pushing up. RSI is making higher highs, look, everything's good. And then when what's called a bearish divergence is when a stock makes a higher high while the RSI makes a lower high. So that's a divergence. Things are different. The RSI didn't make a higher high, but the stock made a higher high. And that's actually shown right here on SPCE. Look, higher high from 2460. It made a higher high to 2478. But look, the RSI was overbought over here. And then the RSI actually didn't become overbought once it made that higher high. And so what that tells you is don't think of it as, oh, it's now no longer overbought over here. Think of it as, oh, momentum just became less on this new high. We might see a reversal. And that exact thing just happened. SPCE sold off the rest of the day. You can also see, so that's called a bearish divergence. You might see a trend change if the RSI makes a lower high while the stock makes a higher high. And if we go back to Roku, there's a bullish divergence. So can you see the bullish divergence? So basically, Roku was making lower lows all day, and then right here, we made a lower low. Look at that, Roku, lower low, low, slightly new low. However, the RSI made a higher low. So the RSI, the bears couldn't get any follow through, and the momentum was stronger on the second lower low. So what happened after that? Roku started making higher highs and resumed an uptrend for a nice good, 1.28%. Sometimes you won't get a full-blown reversal, but you can get a decent reversal. And then look, yeah, that indicated it, the higher low. Roku, eventually its momentum became high. And then look, RSI was overbought. You could have sold right there. You can always wait for a lower high and lower low, which would have been confirmed right about there. So that's kind of how I like to use the RSI. I don't like to use it for overbought or oversold. Those are just conditions. The RSI, unlike Vwap, can work on all time frames. So if we go to something like SPY, look, we became oversold on SPY right about here. And then look, we actually got a bounce. But then look, we became oversold again. And look, SPY just kept on falling. And look what happened to the RSI. The RSI just stayed the same. So maybe somebody was accumulating on this. The RSI eventually made a higher low, right here. And there's a bullish divergence on the RSI, bullish divergence. SPY continues and formed a new uptrend once we made a higher low on the RSI, and SPY started going up. And you could actually see a bearish divergence on SPY earlier. So look, right here, SPY made its all-time high at 339.08. And look, what happened to the RSI? SPY made a new high, but the RSI was lower from its recent pivot high all the way back over here, which was right about 333. Okay, so 333, 339, stock made higher highs, RSI made a lower high. That's a bearish divergence, and we had this huge virus crash based on this was a telling indicator that, hey, momentum is slowing to the upside. Somebody knows something's going on. They're ready to dump this thing. So be mindful for that. So basically, when you're looking at the RSI, you're in a trade, is there a potential divergence or momentum shift? That's how you should think about it. Don't always think about it as oversold buy, overbought sell. So basically, we talked about the Vwap, the RSI. Next, we'll probably talk about the Bollinger Bands and accumulative distribution. And then later, we'll talk about price action and volume. And those are my bread and butter for making money in the market. And on next Sunday, I'm probably going to do a stock market weekly overview. So new style of vids coming next week. So yeah, let me know if you like this video. Let me know if you didn't like this video. Hit the like or dislike. That's my feedback indicator. And yeah, thanks for your time. Hopefully you learned something, and hopefully you can make some money this week. All right, see ya.